This is Rod Kusin in the Spoos for January 19th. Market this morning took off to move all the way to 72.75. Believe it or not, we expect it to drop to 54 and come right back down to the low of yesterday. And we believe that based upon what the premium told us yesterday afternoon. In the afternoon of yesterday, when we hit the low right here, we had a naked bar indicating to us a return to this price. And despite the fact that the market has rallied up as high as it has, we anticipate that this will be coming right back down. Watch and see. Now, we first of all anticipate a rally back to the high. And that's pretty much based on what happened with the premium from the YM. Now, based on the bar here at 921.50, I think it was, we expected bounce back to that price of 22.70.75. And when this bar came in, it was pretty evident that this move was going to take place. So we went long, we made it, we went precisely back to 22.70.75. And look where the premium was. And down we came. Now, indication is we are now short. So, whether or not this will bounce any further back up remains to be seen. But this is a lower high. We've got a slightly higher level on the premium at this point compared to where it was here at 411. So we're here at 406. So we might be going back up there again to test that before we head back down. But right now we are short. And this could be, of course, if it breaks the low of the morning, then all the more reason to anticipate that. That will continue on down. And it could be a real dramatic drop. We'll have to see. But we're short. Now we want to mention that if this thing shorts, it will be very unexpected, because the only pattern that you've got here implies an upward extension. You've got A lower than B and C lower than B and A lower than C. That's an upward extension, and you can't come up with a different pattern. There's no other pattern here to work with. And that's because of this high point here. This is higher than any point that we've had, in the past week. Well, other than way up here. Okay. Now, if we use this, we have a much different story, but we'd have to use a huge pattern here. Now, if you use the high of the week at 73.50 and the low and back to the high of this morning, this is what you'd come up with. And if we come back down, all right, to 63, I think it'll be very convincing that that's the actual pattern that we're working with here. Premium suggests we're going back down. But the current and most recent patterns all indicate that we're going up. Unless you go back to the beginning of the week. Right here. We hit 73.50 on the 13th. We had nothing higher. Okay. Now, we could go all the way back to the 10th at 74, but we'd still be in the same kind of pattern. Or even back here to the 6th at 77. We'd still be in the same pattern. Okay. Except the results would be a bit more dramatic. Because if we take this up to 77, and that's rather interesting. Oh, look at what's happening. Look at what's happening. Oh, how interesting. Look at, looky. There we go. There we go. Yep. Down to 63, a little bounce there. How about that? You saw it live. Everything goes against the most current pattern. All right, let's go back. Let's take a close look at where the premium just went. Kablooey. Oh. Well, better shrink this up a bit. Wow. Nice drop. Okay, we're going to have to retrace it a bit. That premium bar was pretty strong. But by the same token, we're not done going down. And of course, you knew what just happened here. Well, maybe not. Maybe not. we have a new president. Now it came down and bounced off of the low this morning at 63. Yeah, the morning low at 63. But that bar on the premium says, yeah, we're heading down. Now this is a little strange. It's hard. I think the market just moves so fast as it came down here, and when it does, it's very typical for you to see retracement. Probably back up into this area here, around 66, which we're at right now. Okay, we'll come back in a little bit and re-examine how the market's behaving during the balance of the morning. But of course, here's your reaction. Okay, here's your reaction. Oh boy. Well, at this point, we've made it pretty much down to the second standard deviation of the IB calculation. And there's still plenty of the day to go. Now we've been shorting it. We've taken profits now. We're out of the trade. If we get all the way down here, that'll be a gift. And if we see another good opportunity to short, we will. But right now we're flat. As this could have a relatively significant bounce. So we'll come back toward the end of the day and just recap. But we definitely called the short this morning, and the reason again had to do with the low premium bar from yesterday, with an anticipation that we'll return to this price yet today. Time will tell. So we just tested the low once again, and from the low premium here at 556, you can see that we're just up a bit at this last pivot, and a corresponding move back up. But this will be coming back down, no doubt, because this will be a very odd place, time-wise, to expect the low of the day. That doesn't fit much of any kind of pattern. So expect that to be exceeded. Well, here we are once again. We're dropping down to 2260.50. Low is at 59.75. So we're getting close again to the low of the day, as we mentioned previously. The earlier morning low, the timing on that is just off. That's a very unusual time for the low of the day. So we said, that's not the low. And it isn't, because we're still going down. And you can see how we've been dropping. Look at the premium here. Now the low's down here, the low of the premium, that was at negative 545. Okay. We increased the font size to make this a little easier to see. So 545, and we'll get an update here fairly quickly. So we'll come back And unless we really get a drop in the premium, it looks like we're going to wind up being divergent because we're already stepping up here. We haven't quite hit that low point yet. Okay, here we go. You notice how the premium has been stepping down from here, 462. Now this was up just a smidgen, just up a little bit, but then we dropped again to 463 here. 462, 463, down again. Now the real key is to get us below the not the 517 mark, but the 545 mark, because that's the low. We've got quite a few gaps in data, and on a 5-second chart, this is probably not too big of a concern. We should probably be plotting this on the 10-second chart. But in any case, we'll come back as soon as we're right down there. Well, as you can see, we've come off various support levels, and the premium is all moving up. And so we may have to retrace back a little further before this comes down. So what we're going to do is we'll come back at the close and then review how things took place here. So just looking at what we see in the premium here, we see the premium climbing, and for that reason, it's pretty obvious that this market would need to be moving up, at least temporarily, unless we see a significant drop again in the premium. This will continue. But overall, we're still looking for a more significant drop in the last hour. Now let's just take a look at the pattern before we conclude this discussion. The high of the morning takes place here. Now that's in the first 10 minutes. This is a red day pattern down. And in a red day pattern, the lows are in the last half hour. Okay? They're in the last half hour. So in light of that, we've got another full hour to go before we can really expect to see the lows. So for those that are trading in the afternoon, knowing that pattern makes taking a short today in the last hour a real good idea. I don't think we're quite there yet to initiate another short. We probably have to get back up to 63.75, if not better, before we short this thing. But in any case, the last half hour is where the lows ought to be, and if it's completely symmetrical, it'll be at about 240. All right, we'll suspend and we'll come back after the close. Well, here is our wrap up. Now, as we mentioned, we were expecting a potential further drop down to the low of yesterday, the 18th. And that did not transpire. We did, of course, get a short today. And the low took place just before noon, as you can see, at 59.75. Now, the premium at that time was slightly divergent, but still quite low at 5.45. And then, as we dip down here to 60.25, we had stepped up to 5.11. Now that didn't look so good, and then we saw a further step up right in here, which moved the market even higher. But we finally did get a drop later this afternoon. We were talking about the pattern of the day, the pattern being the lows of the day are usually in the last half hour. Now, we did not see a new low. Now, we managed to get back to 60.75 here. So we still, and we were at 5.13 here. Notice 5.11 here. All right, at this, and almost the same here. Essentially no difference. And we're bouncing off of these support levels. Didn't even make it down that far on the YM. This is the INX. And so up we go, up we go. So in the light of all of that, the pattern did not finish, which simply means this. On Monday, if not even Sunday evening, but certainly on Monday, you can expect that this market's going to take another short, at least into the early part of the morning, maybe even mid-morning, to finish out this red day pattern. Because red day patterns are very, very predictable, and when they don't finish, it is highly unlikely that they will wind up not finishing that pattern. Now, there's one possible caveat to all of this, and that is if this was in fact a yellow day pattern, which would be, again, highly unusual. Okay, looking at these lows, this was at 22.60, and then the low of the day right here, right before noon. Now, we occasionally wind up getting a yellow day pattern where the low is right around the middle of the day, and the high winds up being in the last half hour, meaning that we exceed the morning high. And of course, the morning high is way back here. The pattern here would not suggest that. This is not what we typically see in a yellow day pattern. This looks very much still like we're going to wind up going into a red day. But there is a possibility that we could be in a yellow day pattern, and we'll be shooting above 70, 2270 by Monday morning. That's a possibility. So we'll just have to see how that pans out. But no matter what happens here, you've still got a naked bar down. Let's go back over to the previous day. We've got a very naked bar situation down here. There it is, right there at negative 599. So that's why we anticipate that this will come back down. That's our wrap up. It was a good short. nevertheless, and plenty of opportunities for trading short this afternoon, and opportunities to trade long as well if you read the premium properly. I'm Rod Kusin and Spooman for